In the previous video of trading psychology, we discussed the subjective aspect of our mind and our psychology. How some of the negative feelings that adversely impact our ability to make next trading decisions, namely fear, regrets, overconfidence. We also gave an outline in the previous video of what kind of state of mind that you need to practice in actual trading in order to remain consistent. In this video, the view was subjective and it was focused on understanding, accepting and believing the trading psychology, how trading psychology works. In one of our surveys that many still believes that in order to be successful in trading you need luck. In this video I am going to walk you through a different angle and show you how you only need certain skill and keep your behavior consistent with certain habits in order to be successful. Hey guys, this is your friend Arijit and welcome to another session with Quant Gnosis Diary. If you missed the previous part of this video, I strongly suggest please check the part 1 of the trading psychology video before jumping into this video. In the first part, you will need to understand the trading psychology, you need to accept the trading psychology you need to build, and then you need to believe what you need to do in order to find the perfect state of mind for trading. Now before we get into the technical details, let's revisit some of the basic terminology first, as these are the most important parts that you need to study in order to be able to execute the part of the technical details in this trading psychology. Term stop loss. So stop loss is defined as an optimum point as per your convenience to determine whether the trade is working or not, which means when you place a stop loss, you place a objective threshold for a trade to work for you, or it is whether it's going against you. In that point you exit with loss because you were wrong about that trade, and that's why you accept that as a loss and exit. Time frame. So when you are doing time frame, we mostly do the analysis in higher time frame, but while doing executions you can choose to have lower time frame in your charts. The time frame that you use your technical analysis and the connect to execute your actual trade can be different, but whenever you are executing a trade, always keep single time frame, which means if you are doing an intra trade and in a 5-minute time frame to enter, then you need to also use that 5-minute time frame for exit. Risk reward. So how much stop loss you accept in a single trade versus how much opportunity for profit that you see, that ratio of reward divided by risk is the risk reward ratio. So risk is to ratio is best if it's 1:3 or more, because in that case you only need to be accurate on your trade less than 50% of the time. But even if you have a 1:2 risk reward opportunity in certain trade, you can still have net profit with 50% accuracy itself. But in order to have a net profit while your risk reward is only 1:1, that is how much loss you are accepting and how much reward you are expecting, in those cases you have to have a success rate over 60% to have a net profit. So why we spoke about risk reward, time frame, stop loss and accuracy in this context, we'll come to that. Now all of these are used to identify the opportunity before entering a trade, because these are the parameters that you will be looking for before making an entry and planning while you are planning a trade. Now, so we started in the previous video about trading psychology, and we talked about the psychological success failure, believing in consistency and then habits, and you need to have some acceptance about how market works. So when you have a option to trade, we have many choices, right? We have freedom to buy, we can sell, or we can do both. The taste of freedom is a great feeling, and some do get addicted to the feeling of this freedom. Remember in the beginning of the part 1 video, I told about some people seek thrills in the market. Now you need to understand, if you want your outcome of your trades to be consistent, you need to be consistent yourself first. And while you are trying to be consistent, you need to follow rules of repeating the same action again and again, which is eventually boring. And hence, the people who are looking for thrill, this video is not for them. So either you can choose to have a trading freedom to carry out random and subjective trading path, or you can choose a objective trading path to be consistent and follow certain rules in order to be disciplined trader. Now some of the random trades examples are, you take it random, you saw a random advice from a random people and you suddenly took that, entered into that trade. Security or stock is going very high suddenly, and you decided that I need to buy that stock. Another random trade. Then somebody told you market is going to go down or market is going to go up, and you felt like you need to buy or sell because somebody told you so. So these are some of the examples of random trade, and eventually random trades sooner or later result in a net loss because it lacks clarity of discipline either way. So that's why instead of the right psychological path that I believe to be chosen is an objective path. It's a mechanical system consisting of two things. It's a self-discipline and being objective by creating goals and rules. So where you are right now and what are the rules you need to follow in order to reach your goal. And that's why the mechanical trading system will help you to do that. So what's the role of self-discipline in the objective path? Isn't discipline itself is a much more subjective topic? And we all know that none of us born with discipline. We practice discipline in order to make things in our habits. We have no freedom because we have to follow rules. So why would you do that? For that you need to focus on your goal. So discipline will be forced to you. It will feel like you are bound, your hands are cuffed with rules, and it will feel forced, discipline itself, until it become a second nature of you, until it become a habit. And what is objectiveness? The objectiveness is basically focuses on exact number where you want to take an actions, exact number where you want to define an opportunity, an exact number when you have to get out of that opportunity or that trade. So first we need to believe in a consistent system in order to build a mechanical trading system. So to have a belief in a consistent system, you need to have a verifiable result to believe in, that you have already seen that this system works. So trading system consists of one, strategy. So whatever trading strategy you are about to use as part of a system must show a promising result during either back test or forward test. Then only you will be convinced that this strategy works. So you need to test your strategy before making a trading system. Then you also need to understand that you may have also noticed those who randomly use certain strategy in a random trades, that some of the strategy works sometimes and sometimes it does not work anymore. So the reasons could be different because the market behavior changes depending on the variables that affects the market price time to time. Some strategy will work sometimes and some strategy will not work sometimes. And you need to understand the strategy you are using, what's the weakness and when the strategy is not working. There is another objective way to identify whether a strategy is working at all or not. You can trade in sets. So what does that mean? You choose 20, 30 or 40 a number and set trade only that many trades in one single set. So it's like a group of trades, a group of 20 trades that you decided to do in first set. Then after every set completes, you take a break, evaluate your performance, and see how your strategy is working or how is your current actual performance in actual trade. Now, apart from trading in sets, you need to, apart from testing your strategy, you need to also have a predefined stops to have a mechanical trading system. So since we are talking about sets, let's say you choose 20 trades in a single set, and let's say per trade 1000 and approximately 20,000 bucks is what you are okay with losing after 20 trades. In the worst case scenario, in case you fail to make any profit in 20 consecutive trade, so it will result in a 20 trade loss, and that's a 20,000 rupees loss. So before entering the set, you know that that much loss can occur and you accept that, and that's why you will be able to mentally be able to calm and find peace with yourself even if the worst case scenario happens. Now once you have finalized the total risk for one single set, distribute that stop loss between individual trades. So if you have 20 trades plan, for the next 20 trade plan you already have, and then each of the trade distribute that 20,000 loss and keep a stop loss less than that in 20 trades. If in any case the stop loss exceed 20,000 before completing the set, that will also conclude your 20 trading set at that point. You will not continue to trade further in that set. Take a break, come back, find what's wrong, and then start a new set after that. So important part in this point is predefined stop loss, is that in your psychological behavior you will need to determine that I have to accept losses in case the trade goes against me. I need to believe that this is also possibility, and then I have to practice doing a predefined stop. End of each set, when you complete a set of trading, monitor your performance, understand what are the mistakes has been made. Have you actually broken any of the rule of your mechanical trading system, where your strategy gave you clear entry, clear exit, but you still did not enter into that trade, or you did not clearly exit from that trade despite your trading system give a clear entry or exit signals? Or have you ignored the rule of your stop loss and exceeded the loss that you wanted to accept initially and then hold it for more loss? So these are the things you need to monitor, and also you need to monitor how your strategy performing, whether it's able to give, it's a problem with the strategy or it's a problem with yourself with not following the rules. Now we'll get more technical with more objective points. So step 1, I told in the previous video, we need to accept, understand and believe. So that's the most important part of your trading psychology, that you need to accept all the things we discussed in the part 1 of the video. You need to believe and you need to practice. So before going into practice, step 2 is you have to test your strategy. For mechanical system to work, you will need to have a perfect exact entry point and exact exit point for your strategy. So each strategy will have predefined entry and predefined exit points, which means there will be no trading outside the system. Now before deploying the strategy, you either need to backtest it or forward test it. You can also do forward testing with paper trading as well. Once you test your strategy, you know how many times the strategy fails and when exactly strategy fails and when exactly strategy success, and how much stop loss you will need to find to your optimum point in order to find that that strategy is not working in that particular scenario. So all these details, the objective details that you need to make your tradings, all this will be you need to find out using testing your strategy. So strategy does not have to be perfect one. It could be any strategy. It could be simple moving average crossover. Let's say it's a 50 hours you buy a stocks when it's every time it goes above 50 hour moving average. It could be as simple as that. But the important part of that is you need to have exact entry defined and you have to have exact exit defined while doing the testing. Now we talked about trading in set. So either define a 20 or 30, find a number which is balanced and fine. That's the number of trades you will be doing in a single group or in a single set. Then you have to clearly define how much total risk you will do for the set. So like I mentioned, if you are doing 20 trades and you have 20,000 risk acceptance or risk appetite of 20,000 rupees, then you have to define that the total risk for the entire set. You found what will be the optimum entry exit based on your strategy, and then define those entry and exit clearly, maybe in a notepad or in a blackboard or whatever reference you have. Write it down, exact entry and exit for your strategy. Have a clear time frame for your strategy as well. So which means if you are using the strategy for 5-minute time frame, keep the 5-minute time frame in your chart while checking or entering or exiting. Okay, so keep that time frame constant and define based on testing your strategy. Now the one of the final part of defining your rules for the mechanical trading system is profit taking exit. So this is probably one of the toughest thing to do. We know exactly how much risk we'll accept, so we can define a stop loss and we know where we have to exit in case it's a loss. But what becomes difficult to decide whether to exit, when to take a profit. Why? Because sometimes we exit too early, sometimes we exit too low. So a profitable trade, sometimes it goes for bigger profit, and profitable trade sometimes go back down and lose the entire profit itself. So some of the experienced people use trailing stop loss in order to exit from a point to protect how much money you are keeping on the table, how much profit you are keeping on the table before deciding it's going to reverse from your favor to your opposite directions. So that's one way of taking profits in trending market. But sometimes that is not enough, because it hit your trailing stop loss and then it ran away. That also possibilities, and you may regret because you have missed a bigger move. So for this is why for profit taking exit there are certain rules you can determine when to exit with your profits. So this may take some time to get used to it, because a winning trade there is no perfect exit point for a winning trade, as price does not move in one directions. Now if you feel your strategy exit are not giving consistent profit taking exit, use your mind to find a strategic route for exiting. Let's say I am trading a 20 trade set, and in a trade I'll trade, my position size is 4 lot of some options or some futures, or it's a quantity of a stock which is a multiplication of 4. So in essence I can divide my entire positions into 4 different parts: 25%, 25%, 25%, and another 25%. Now I have already defined an entry, so I entered into a trade. Okay, if there is 2 possibility, the trade can go against my favor, so which means it will come to my defined risk. If it comes to my defined risk, all 4 quantity I'll exit at the same time, because as per my risk plan. But in the opposite case scenario, after entry price moves suddenly little up. Let's say price went in my favor a little bit more immediately after entering. So what I will do, I am going to book 1 positions, which is 25% of my positions, and that will reduce my risk in case after moving initially it immediately comes back to my stop or the risk amount. So it will reduce the total risk at that point. Now let's say price instead of going, if it comes back to the stop loss, it hit the stop loss for the remaining 75% position or remaining 3 quantity out of 4. Then I have to exit all as per my risk plan, all remaining 3 positions as well. But let's assume that remaining 3 position, instead of hitting stop loss, it goes in my favor and go towards my risk reward target as per my strategy. So let's say it goes to 1 risk for it goes to 2 reward or 3 reward, whatever the target was there. Now once it reached the initial target, what I do is I'm going to exit 2 more quantity. So at this point I have booked 75% of my positions with profit and holding only 25% positions. Now at this point I'll also keep remaining 25% stop loss at cost. So last 1 position out of 4 quantity I'm going to ride as long as the market going to move in directions with a cost as stop loss. So I can capture the maximum move with the last quantity while I still have a risk-free position, because I have already booked 75% positions with profit, which means at this point the trade is risk-free and you have to have no tension. You can just leave it and how far it can go. So that's how I can strategize and be objective about profit taking. So instead of regretting that whether I have exited too early or too late, I have strategically made it sure that I am able to capture most of the move at least. Now the last point is monitoring. So once you have strategy, you defined your rules in your mechanical system, and the last part of that mechanical system is monitoring. You need to monitor your performance after each set. So 20 or 30 trades complete, take a break, monitor what was the performance, monitor what was the mistake you made, and find out. Now out of monitoring you need to define if there was any of the trade you have breached your defined rules, and you can come up with your own strategy to, if you have broken a rule, you are not allowed to trade for next 1 day, 2 day, 3 day as a punishment. So in order to be disciplined, you will need to have a punishment system. Whenever you are breaking your rules, you are not allowed to trade for some time. So, and this is the most difficult part, is following the rules, right? So in order to do that, you will need to have these rules you need to have written somewhere and need to follow that consistently. So to give a summary of 2 video, we have discussed what are the negative emotions are, that I could have made more profit, I missed out on that opportunity, no, my trade could have been perfect and it was not perfect, and I had hesitation that I could not make an entry with a clear opportunity that was in front of me. When I hit the stop loss and price reversed and gave me the same opportunity, I hesitated because previous trade was stop loss. So these are some of the examples of negative emotions. We need to accept these are the things that are all part of the game called trading. You need to accept that all of that is part of your reality, and you need to believe that in order to go to the next step. You will need to plan your rules of your mechanical system so that you know you have a clear entry, exit, stop loss, and how many trades you need to do, what is the position size you need to take. All of this defined beforehand so that you don't have to rush in the last minute because prices went this direction or that directions. You don't need to have the tension flowing in your mind for entry exits. When you're defining the rules, you need to be objective and define exact number where you make an entry and exact number where you make an exit. You need to follow those rules at the same time and practice these things consistently with a positive attitude, because your attitude will define whether your ability to adapt to the rules will define how soon you can be successful. As a closing note, this 2-part video is more of a journey through our inside problems and how to rise above those inside problems with certain objective rules and discipline. But knowing this knowledge is not sufficient for you unless you take responsibility for your behavior and walk the right path by defining these rules. It's up to you to convert the understanding of this knowledge to your actual practice and make them a good habit so that you can remain consistent from your side and remain disciplined.